Hey guys, Omar Khan here with Theta Trading and wanted to welcome you to our latest YouTube video. All right, before we do that, I wanted just to ask you if you could do a favor, hit that like button, hit that subscribe button. If you like our content, please review everything we do. We're an open book here. This is the strategy that changed my life. It's why we started this company, Theta Trading. I hope it makes sense to you what we do. If you want to learn more about us, visit thetatradingco.com, and we offer a course as well, which teaches the strategy that we used to get to financial freedom while having jobs, while having a busy family life. It's an awesome strategy. In my opinion, it's the best strategy out there. So take a look at it. There's a lot to learn. All right, before we do that, now that we're done that, let's look at what happened on the jobs front, okay? Now, what's been bothering the markets? The stock market, the real estate market, everything has been this nasty word called inflation, okay? That is essentially too much money chasing too little goods and services, thus causing those goods and services to rise in price, okay? So getting to a very high point price-wise. If you've noticed at the gas station, at the grocery store, just things you're buying now cost more, okay? And why that could be disastrous is because inflation can spiral out of control. And the job of the Federal Reserve is to control inflation and have the economy running at full steam. That's their job. And they are hell-bent on doing this job, okay? Now, inflation is high. So how do you combat high inflation? Well, the central banks around the world, let's just talk about the U.S. Federal Reserve, they raise interest rates, therefore making it more expensive to borrow money. If it's more expensive to borrow money, you're going to invest less in your business. You might not buy that new house. You're going to be more careful in spending. And what happens as a result of this is inflation starts to go down. That is exactly what they're hoping for. So what they're hoping for is to hurt the economy enough to cause inflation to come down, okay, yet not kill the economy. It's not an easy thing to do, but that's what they're trying to do right now, okay? So let's take a look at the data. Now, they've raised rates a few different times, okay? So Federal Reserve has raised rates over and over again. We don't know if they're going to need to raise them more or less, right? Maybe it's enough. Maybe it's not enough. But what we're going to be looking at for is deterioration of the economy and positive inflationary data, okay? So we had a report this morning, the jobs report, like I was talking about. The level of jobs plunged by more than 1.1 million in August, okay? Right? So what is the Federal Reserve trying to do? Well, they're trying to hurt the economy and slow it down, but not kill it. Remember, that's what they're trying to do. This thing that you've been hearing about called a soft landing or a hard landing. Hard landing is when they would really hurt the economy. Soft landing is we did our job, we slowed the economy down, we didn't destroy it. And nobody knows how it's going to end, and that's why the markets are in such influx, okay? So we got some data this morning, and all we can really go by is data, okay? Job openings plunged by more than 1.1 million in August, okay? So what that means is out of available jobs, there was 11.17 million in July, okay? Now, there are only 10 million or so jobs. That's about a little over a million less jobs available, okay? So what you're starting to see is because of all those interest rate hikes, because of all the stuff that was going on in terms of trying to slow the economy down, quantitative tightening, I'll get into that, in a different video. This is all having, it looks like, a decent effect so far. This is one piece of data we have. We haven't had much good inflationary data, but this was a good sign, right? You're thinking, wait a second, there's a million less jobs. How is that a good thing? Well, that's exactly what they're trying to do. Bad news is good news in this environment, okay? So here you can see 1.1 million jobs lost, okay? And let's see what do the market think of it? So let's go, first of all, go to the bond market, okay? So the bond market is the biggest market in the world, and it's very foretelling of what could happen in the real estate market and the stock market, okay? So we're going to look at the 2-year treasury here, okay? The U.S. 2-year here. We can see it's at 4.08%, okay? And we look at the 10-year, okay, which is at 3.62%. I know this is really boring stuff, but what is supposed to happen is the 2-year should be paying you less than the 10-year. But it's not the case right now. The yield on the 10-year is 3.62%. That means if you give the government your money for 10 years, they're going to give you 3.62%. If you only give them money for 2 years, you're getting 4.08%. Now, the way things are supposed to work is the longer you lend money out for, the more you are supposed to get. The shorter the time frame, the less you were supposed to get. Now, this is what is known as an inverted yield curve, okay? And it has been in place for a while. And now, inverted yield curves generally lead or are a leading indicator to a coming recession, okay? And that is exactly what we are in. So the bond market is telling us that we are in a recession. It's telling us inflation is still running high in the short term here at 4.08%. Now this number will go higher if inflationary data does not start coming back a bit positive. So basically, if prices don't start coming down, this number is going to keep going up, okay? And that's a problem. We don't want this number to go up. We want inflation to start coming down, okay? And you're thinking, okay, first, there's 1.1 million less jobs available. We have an inverted yield curve, so not a good jobs report, terrible economic environment. Let's see how the markets are reacting to this, okay? Well, let's take a look at the U.S. markets. All right, so look at that. The NASDAQ is up 3.34%. The S&P is up almost 3% here. You can see here. 3.36, and the Dow Jones is up 2.63. Those are big increases, okay? And you're thinking, why would the market be up so much when you have this terrible jobs number? Well, that is the weird nature of the market. The market is a forward-looking mechanism, okay? It's looking forward. It's pricing in today what it sees happening in 6 to 12 months from now, okay? The real estate market is a lagging indicator. It's going to react after the fact. And now that's why you saw the start of the year, the stock market started getting absolutely beaten down. Real estate didn't really start falling apart, at least where I am in Toronto, Canada, until about May or so. April, May, it started getting really wonky, and it's gotten pretty bad now. And it'll probably keep getting hit as long as interest rates keep going up. Why? Because it costs more to borrow money then, right? And that's exactly what they're looking to do. So we're seeing housing prices come down. The stock market being a forward-looking mechanism, it's saying, wow, this is good news. We have less jobs, therefore less people willing to buy stuff, therefore lower inflation. Therefore, the Federal Reserve will not need to keep increasing interest rates. That is how the market has viewed this. So as weird as it may seem, you lose a million jobs, well, less million jobs available, and the market's like, this is great. Let's rally, right? And that is exactly what has happened. Now, if that jobs report had come in really strong, let's say instead of, being at, 10 million, let's say that had gone up 1.1 million. Just say theoretically it went up to 12 million, 12.1 million. All of a sudden, the market would have said, uh-oh, there's too much economic activity still going on. The Federal Reserve is going to keep having to raise rates. We better sell off. And that's what's going to happen. Bond prices would have gone up. Stock market would have gone down. But this bad news is being looked at as good news again because the stock market is a forward-looking mechanism. It's saying, finally, there is some decent, there's a shoot of optimism because it looks like maybe inflation is going down. Maybe inflation's at least plateauing. It's just saying, because the market has gotten absolutely killed this year, like I said. Killed. And this doesn't happen very often. We're looking at this morning. I was looking at the markets. It's been the worst market since 2008. It's been bad. But remember, in all that turmoil, that is the most advantageous time to invest. Because the markets have always gone to an all-time high. Always. Now, there's no guarantee that'll happen again in the future because anything in this world can happen, right? However, history has taught us markets have always gone to an all-time high. And that's a good spot to be in. So, that's exactly what the markets are doing right now. It's pricing in today. It's saying, oh, good. Finally, a little bit less jobs. Therefore, people will start spending less money. Therefore, hopefully, this interest rate hikes are over. Great news. Let's plow money into the market. And that is why you were seeing a rally. Now, if you want to learn more about how economics works, how to create wealth, what we do is, what I did is I literally took my knowledge, made money on the stock market using options, and check out our website, thetatradingco.com. And while I was working, I systematically bought real estate with my profits until I was in a point where I didn't have to work anymore. And that's a really good spot to be in. That's why we're able to start a company like Theta Trading because we have the time and the ability to and the capital to. And it really matters. Being able to do what you want in your life when you want to is a really good place to be in. And that's what we do here at Theta. So guys, hit that like button. Consider subscribing to our channel if you want to learn more about financial literacy and knowledge. And until next time, we'll see you soon. Omar Khan from Theta Trading. Take care.